Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. Today, I'm going to give it a quick market update and talk about some of the trades that I've got in play at the moment and go over the strategies that I've covered in the last few videos, which are all long-term swing trading strategies that are all long right now, and look at the entries. And if anyone followed along with those, we can discuss profit points and all that sort of stuff, and also just go over it again. So, if you didn't take any of them and you maybe were looking at how the strategies work, then perhaps there's a little more confidence now that, these will work, or at least as you will see these play out, maybe the next time you decide to implement some of these into your own trading strategies. So let's get straight into it. First up, just going to cover the macro chart. So this one is kind of like a one-stop shop to gauge as to where we're at generally in the market. So I've covered this in many of my previous videos, and I tend to start off with this chart just because I quite like it. It just gives a general zoomed out view. Down here we've got the risk index. So if you are a fan of buying into the undervalued and selling into the overvalued, so basically the way this works is you would say DCA, the dollar cost average, into the undervalued zone here, and then that is during the bear market. Generally speaking, that's when it will be down here, and then you DCA out when we get to these red bands essentially. So as you can see, in terms of the crypto risk index, we're well and truly into the DCA zone. So this is the undervalued zone. And even with this little pump here, we're still in the undervalued zone. Now, another thing to look at here on the side is this is the volume profile. So this is measuring this entire move all the way back in July through till today, because it just extends perpetually. And what this is doing is, on a vertical axis, it's actually plotting volume per price point. So each one of these bars basically represents the amount of volume that took place in this small range of price. We're talking about a percent worth of price action within each one of these bars. So the reason why this is really good is because it shows where a lot of volume took place. So that generally will act as either support or resistance, because there'll be a lot of orders there. So there'll be a lot of spot purchases or perpetual positions in these zones basically, and so often they act as support and resistance. So whenever you see a big peak here, that's called a high volume node. And generally speaking, when you have these big dips here, that means there wasn't a lot of volume here. So every time we got to these little zones here, not a lot of orders were put here. So it means that people that want to stop out at break even or anything like that, for the most part, that is the biggest thing. It's a lot of stopping out and break even. So there won't be a lot of orders here for the most part in terms of stop losses or liquidity. And as we know, price tends to gravitate to liquidity. So it means that these aren't really high liquidity areas. So unless there's say like a moving average in this zone or something like this, generally what happens is once you get to something like somewhere around here, the next main pocket of liquidity will be up here. And that's a 29,000, which is pretty nuts. But it just means that through here, there's a good chance that price can just run straight through here as it hunts the next liquidity zone. So this red bar here is called the point of control, which is the highest volume node in this measured range. And the point of control right now is literally the bottom of this range here. So it means the most amount of volume that's been traded in this entire year since July last year. So we're talking a long period of time. Well, this is a year and a half here that we're talking just about. Well, most of the volume throughout all of this price action has taken place in this range here. So even here, we didn't really have that much volume. And so this whole range here is basically where we've had the most amount of trading volume. And this is the index. So this is taking volume into consideration from multiple exchanges. So it just means that this point here has been a very strong support. And as you can see, it's held a support, and now we're moving on to the next thing. So here's the 21-week EMA and 20-week SMA. This band here is called the bull market support band. These are two significant moving averages, and they will act as support or resistance depending on where they are. So when price is above, they should act as support. And if they don't, then, well, it's not good. It's not a good sign, right? So we haven't actually tested this bull market support band since March this year. So what happened last time was we got to it, we broke out, and then we came back down, and we could not hold it as support. And if you can't hold it as support on the way back down, then it's a very bearish sign. So here you can see the same thing happened. We could not hold it as support, and we just went down. We went down to the median line here on the logarithmic growth curve, which is a Fibonacci based or calculated line. So that's one of the reasons why it acted so well as support here. This one here acted as support here, so on and so forth. Its Fibonacci's are really good like that. So we're in a really pivotal point right now, and I'll show you in the next chart another reason why we're at a very pivotal point and why I'm quite bullish right now, at least in the short term. Because as far as I'm concerned here, I feel like this is going to be a proper relief rally. In terms of key levels, well, I'll discuss that in the next chart, but the fact that we've broken past at least into this band, to me is quite positive, but we're not out of the woods yet. You know, it's not going to be like here most likely, because this was in the middle of the bull market, right? So in the middle of the bull market, we could just push straight through, go up and then retest and then bang up. So that's different. This was the bull market, or at least the tail end of the bull market. It's kind of weird though, because we didn't really have much volume or anything like that happening around here. So, you know, it was a very strange part of the bull market, but that was potentially your expanded flat correction beginning. So what we're looking at now is we've held this area as support. We've held the bottom of the logarithmic growth curves as support as well. So, you know, this has been measured since the beginning of time, basically, or at least Bitcoin's time. So, you know, and we've been sitting right at the bottom of it since that first capitulation got really close to the bottom of it, 17K essentially. And then we grinded back up, and then we were rejected from the 2-day 21, and I'll show you that in a second, for several days, almost a week. And then we basically just bled down to touch the bottom of the logarithmic regression band, where we sat and we tracked sideways for weeks. So this is 1, 2, 3, 4, 5 weekly candle closes, all with very little movement. And when that sort of thing happens, little recoveries can be quite nice, and they can happen. So, you know, have a look at this bleed here, where we just bled down and then we tracked sideways, and then basically we popped up 40% just before the pandemic crash. But this is an outlier, right? This is not a normal thing. These are edge cases, these black swan events. So the price action probably wouldn't have looked like this if it wasn't for this. Most likely, I would say we probably would have been, we might have even made a higher high in all honesty, but we probably would have just kind of tracked around sideways and done a slow grind around here, most likely, if we didn't have this. But you can see that this sort of thing happens where we just kind of go sideways after a bleed down. So we say a bleed down, right? Just compressed and a lot smaller, because there's a lot more volume, there's a lot more money in Bitcoin now. So these kind of moves like this can be quite a bit more compressed. So slow bleed down, tracking sideways for weeks. We had 1, 2, 3, 4, 5, 6 weeks. And then we had that 40% move up. So I don't know if we'll get another 40% move like compared to that. And of course, this is not indicative of the current price action, but it's just something to consider. If we can break past this bull market support band, well, then there's a good chance we might rally back up. But then I feel like we'd probably come back down to test the bull market support band once again, once it gets around to maybe 23K or so, and then maybe just fall through, retest some of the lows, and then start our path to recovery potentially. That's a potential play, or we just completely recover, and then I would say we're just going to grind up slowly kind of look very sidewaysy for a while, or maybe have like some relief rallies and then we track back down to the bottom of the logarithmic regression, and we just kind of do this for the next couple of years as a possibility. So what would a 40% move look like? So here we go. This is the breakout of the range, the first weekly candle, which is this one here. So 40% move, and I'm not saying this is going to happen. It would be pretty crazy if it did, but we're looking at around 29K roughly. So that'd be a pretty nice run, and that would come down to here, I guess, and test these levels. So let's just draw a horizontal ray line here. So that's a possibility, certainly is a possibility. Not saying it will happen, absolutely not, but I'm saying it's definitely something that can happen. A rally to 29K. It's actually not that crazy, in all honesty. Crazier things have happened. I mean, like this. And even here we had this relief rally, and this wasn't the start of the bull market, but we had this drop down, tracked sideways for a long time. And I've measured this out before, and I'm sure people have looked at this charts before, but 133 days. And, you know, we've pretty much had that 133 days of going relatively sideways, right? But then we could also be here as well. So that's something to consider. We went relatively sideways. But a little breakout of the bull market support band here, that would invalidate this for the most part, because we stuck below the bull market support band for the most part. Here was the first fake out, right? And you could compare that to this. And then we got stuck down below this. Could not get up. Could not get above this band. That's not happening now, right? If we are able to break above this, then I don't feel like these crazy lows are still in the cards, especially with all these people crying for them, right? Or a lot of people on Twitter and influencers on social media and YouTube and places like this are still crying for lower prices, but people were crying for lower prices here as well. Anyone who was around in 2018, if you were consuming YouTube content, then you were seeing a lot of people, influencers of that time, calling for lows down to crazy levels like $1,000 and whatnot. But yeah, there's a chance that this isn't going to happen. I'm not being super bullish here, I'm just being realistic. But yeah, a nice little rally could be on the cards right now, right? We could be breaking out of here. If we're able to retest the 21 and hold that, then who knows where we go from there. We could actually even head to anywhere around this value area. Essentially, these lines here are the value area high and value area low, which is where the main volume was within this range, measured from the volume profile. But we could get up to, who knows? I mean, I don't think we will push past here necessarily, but at least from here to where we could go, that's, 30%. It's still pretty nice from where we are right now. So I think I've belabored this point enough. I think that a nice little rally is on the cards. And I believe last time I did a market update video and I discussed this chart. This was something that I was talking about, is some sort of bullish move to the upside. So that was pretty nice that this chart actually helped me with that bias, because I've been quite bearish, in all honesty. Even with this higher cycle bottom, I've been quite bearish and looking for short opportunities. But this chart just kind of makes me feel quite bullish, especially when you see this tracking sideways. It's just really nice. It's just laid out really nicely. Quite a few lines and stuff like that. I know it can be a little bit to look at sometimes, but once you look through it all, it kind of just makes sense. Next up, we have the PSAR chart. Now, this is the last strategy that I covered. I hope that anyone that watched that video considered this and backtested this and looked at it as a potential strategy for themselves to potentially add to their arsenal, right? And again, I can't give financial advice or anything like that, so it's up to you to test these strategies and see if they will work for you. But I will show you what happened yesterday. So yesterday, this broke out to the upside. This is the parabolic SAR line. In the last video, I mentioned this. So these were the two paths that I was looking at the time. So it shows you, I guess it was quite a while ago that I made this video, but there was a little channel here. We slipped out of that channel, retested it, and I was saying we'll go down. So this is basically what I had on my chart, is this little zigzag here. So this is where price was when I made that last video. And there were some lines in here showing like a channel, an ascending channel. And I was saying that basically we'll probably slip out of it, retest it, and then come down. Well, that's exactly what happened. Look at this wick. We came down, and then we went back up. Obviously, these zigzaggy lines aren't exactly how price is going to play out. Often these moves can happen in 1 or 2 candles. It's not just yeah, we're just going to do this perfect movement, especially with Bitcoin, where it just goes sideways for long periods of time. So this exactly played out, and then we went to the top of the range, where I actually had another arrow in here, whereas basically we could come down here again, and then we could like fall through the floor, or we break out and we retest down here, potentially come back into this range and then break out. But I revised this line here recently, and in the last video I had this green line here, this green bullish case. Okay, so this is what we're kind of looking at now. So again, these don't play out perfectly, and as soon as you see this, the way this usually works is you wait for the retest after the candle closes, and then you go long. What I did is, as soon as it hit this parabolic SAR, I zoomed in on the low time frame on the 1 minute chart of all things, and I executed still on this line just about. I front run the moving average just a little bit, but I actually had a short in on Bitcoin, and surprisingly it played out pretty well, because I shorted at the 21. So this white line here is the 21 period. This line right here is the 21 period smooth moving average. And the reason why I like smooth moving averages is because they're very common with Forex traders. And generally they're the ones that have the most money, and they're the ones that like to move the market, essentially, because they're more experienced than most retail traders. So, and they factor a lot of history into them. And as I covered in the last video, this 21 period smooth moving average has been a great shorting smooth moving average, or at least closing long positions. So here it respected for 6 days, and that's what I was talking about before. I shorted here to the bottom of the range. This was an amazing short. I can't believe I was able to pull that off. It was pretty good. About 26% move, 27% move. I did take profit along the way, so I DCA'd out of my short. So just like I DCA into spot positions, I also DCA out of my long and shorts on perpetuals trades as well. That's just how I like to do it. Everyone's different. Everyone's risk management is different, but this is how I like to play it. So what I was looking at is, this is the top of the range here. So a break of this little structure here, in my opinion, was a very bullish thing. So we broke above this structure, came back down to test it, had a bit of a fake out because we had some crazy volatility from the FOMC meeting, and then even yesterday with the unemployment rate figures, which both were really hawkish in my opinion. More jobs were added, and Fed Chair Powell was really hawkish. He said that there's no chance of a pivot anytime soon. That's pretty much what he said, no chance of a pivot. But the market still went bullish, and then jobs were added, which means that Fed Chair Powell can justify being more bullish, because it means their current definition of a recession is that there is high unemployment, spending is low, which is the demand destruction side of things, and inflation is still high. So all of that was quite hawkish, but we still rallied up anyway. I guess we're just following the trend, right? So the trend since October 20 has been bullish, right? So it's just a continuation of the trend with volatility in between. So this has played out quite nicely. And the way I did this was, as soon as this wicked to the PSAR line, just that white line right there, kind of barely see it, but that's the PSAR line. And check the link out below to the video where I explain the strategy. It's my previous video if you want to get a deep dive on this. But as soon as we hit that PSAR, we kind of wicked down within this 2 daily candle, and we wicked down to the bull market support band, right? The bottom of the bull market support band, which I'd say is a range here. So we've got the 21 SMMA on the 2 day, and then we've got the bottom of the bull market support band, and then we've got the top of the structure here. So these are all strong confluence zones that will act as strong support. And surely enough, we hit that sort of zone. I completely sniped that entry down the bottom, and I only acted after we flipped green on the PSAR. So I didn't catch down here on this particular entry, but I caught around here. So it's not bad to have that confirmation, right? It's better to wait for confirmation a lot of the time. So I was able to get this entry here. Now, if you were following this and you're waiting for the candle to close, that's the normal entry for this strategy right here at the candle close. Or the way I would like to do it is wait for a retest. We kind of already had the retest on a smaller time frame. So basically it's up to you at this stage if you're not in to consider it as a possibility. So the main levels that I'm looking at is the top of the bull market support band could act as resistance. This Fibonacci here, which is that's a trend extension Fibonacci measured from up above, up here. So that's measured from, it's a ABC corrective pattern Fibonacci level. It's an extension, right? A Fib extension level. And that's measured from this high here, this local top, in the last breakout to the first leg down, this capitulation candle here, then back up here. So that's what this level is. So there's a chance that that could be respected as a resistance, as it held as support here, and it also was rejected from here right there, which was also confluence with 21 SMA. So that's one first point where we could get rejected. But I feel like the next stop personally is the 50-week smooth moving average. That's where I have my second profit point. My first profit point is up around here. Personally, that's just where I've got mine. The next one is up around here. So I managed to get my entry in here and I'm happy with 20%. That's pretty nice. And even I'm happy with 10%. I think my first profit point is around 12% from my entry, roughly, which is here. So we have a lot to deal with. We have a lot of resistances ahead, a lot of points of reversal, but we've beaten and taken out the 21 on the 2-day. It's the first time we've been able to do it since March. And back in March, we still weren't sure if we were in a bear market yet. So there was still a lot of bullish momentum. There was a lot of people trying to pull price back up. Whereas now we've got way more bears in the market. So it just means that these levels will be much harder to break than they were back in March. But nevertheless, this is how the strategy works. This is a long and I'm in it. And hopefully if anyone else watched my video and considered it as a good strategy, because I did show all the way back how it works and how it's worked before, then at least even if you're not taking these signals, then at least you can be bullish. And if you're holding along anyway, or if you've bought a whole bunch, maybe you can just consider that as some good news and something of a confluence to support your own analysis. So in my opinion, and this is just a possibility, I feel like we might get a nice move up to either the 50 or we break up and maybe we stop a little short of this trend line here, which is the logarithmic based trend line dating back to the start of the year. And I showed that in the last video. And this could be this Santa Claus rally that we're looking at. But nothing goes up in a straight line, so we're going to get chop in between. We might track sideways here or there. But yeah, there's a chance we still might come up here. And I think this will probably be maybe here by the time we get there. And then maybe we come back down and retest this 21 SMA. So if you miss this entry, I mean, it's still not too late, but if you miss this entry and you want to wait for the retest, it still could be in play. And then we head up to the higher levels. But nothing goes up in a straight line, so we might zigzag up there, track sideways, go up, do all sorts of crazy stuff in between. Maybe we come all the way back down here as a possibility. Retest this wedge as people get too bullish, maybe trapping longs up the top here, or the late longs, especially on the weekend here where we got people kind of aping into the market, all this liquidity up here and then just tear down. Maybe we lose this 21 again, because it does happen from time to time. And maybe we claw back above it and then continue on our way. As people get more bearish and start to open shorts, then maybe like shorts get trapped and then we rip back up, because in order for these big moves to happen, there needs to be a lot of liquidity. So that's this. We're long on Bitcoin basically. And if you want to watch a video detailing the strategy, please watch the one in the link below, or just check my channel out and you can see it is a market update and Bitcoin swing trading strategy video. Next up, we've got the Bollinger Bands Solana perpetuals strategy. Now, I haven't been able to use this because I was using Mango Markets for this strategy, and thankfully I got my money back from Mango Markets, and so did everyone else. All users from Mango Markets were redeemed of their funds, and it was a very weird edge case for a DeFi protocol to get exploited and for the users to get their funds back. Very, very, very rare edge case indeed. So excuse all the lines on the chart here. Hopefully your eyes can adjust. Yeah, but we've just got sort of basic structure here. We've got a Fibonacci retracement. So what we're looking at right now is this strategy has been great. It has been absolutely great. And I wish I could have taken a lot of these trades. So the last one I was able to take was this one here. And that was amazing. But guess what? I didn't make a cent from this. 22% move. 22%. I didn't make a cent from this because my money was in Mango and my short was in Mango. So I had a pretty big short open here and I sniped it right here on the 21 retest after the signal, and that was great. And thankfully, I guess, I wasn't able to take this long because we had this buy signal. We went long and at least the first profit point was taken. So here's the long signal here on the 21, so the white line, the thick white line. This is the EMA. So I like it as a reference. The thin white line is just the EMA, the 21 EMA on the 2-hour Solana chart, but I don't actually trade off of it. Sometimes I do if I feel like a move might be really strong and we might not get up a retest of the 21 smooth moving average. I will just front run a lot of them and kind of just try to get in as close as I can. But we had this, and then there's a 2% move in there from the entry to the top, 1.91. That was the first profit point to take either a quarter or a fifth of the position off. Let's say a quarter. And then we kind of fell through, unfortunately. So this looks pretty bad, but then if you did take profit, then your break even would have been pushed further down, right? So you might have been down here. Were you able to get into this short? Well, there was no retest. So here was the sell point, right? And there was no retest. It's only 2%. And if you were waiting for a retest, that's where you would have entered your short. Okay, so yeah, it's not looking great. It's not looking great at this stage, right? So if you did, and often if I can't get in at the start of the move, I just won't take the position. But if I've got a position open, then I will just close and wait for the next signal often. Because by the time this happens, when you flip, there's a good chance that it'll just come back and do like this again. So anyway, if you did hold on to your long and waited for the retest, well, that would have been when you got out. That might have been a break even, maybe a small loss, right? And then here is the long signal, and the first moving average is here, or the 21 is here. So personally, I would have got in here and then here for the long. So scaled into a position most likely, because I'll go all in on a 21, but I'll scale in on a 50. So if I'm at a 50, I'll go half my position and then half. If I'm at a 21, then I'll go the whole position size because it's further down, so it's a lot better. But as you can see, we kind of broke down, sell signal was in, and then we had a 1.68, maybe a little more if you scaled in half and half. I think your position probably would have been somewhere in the middle here. So let's just like try and move this somewhere where the magnet won't get it. 2.4%. Yeah, and at this stage, maybe you would have been pretty disheartened because you're like, well, this didn't work, so this sucks. But I mean, this worked. That was 20%, so a couple percent getting chopped is not too big a deal, but that's just the way I feel. I don't mind a few losses if it means that I can get some big wins. So this sell signal, yeah, good chance you probably would not have been able to get into this if you had your limit order up here. That's 0.7% away. How frustrating would that have been? So I often will front run the moving averages by sometimes like 0.5% or so. because I've just been left in the dust so many times from it not quite testing that I'm a little more aggressive with my entries now, which makes the losses when this sort of thing happens a bit greater. So it can be quite frustrating. But when I see this kind of price action, we had a retest here, recent retest. Okay. I like to look at what happened before. So we had a break out of the 21, break above the 50, tried to push, couldn't even get to the next one, which is the 100, fell to the 50, fell down to the 21 and couldn't hold it, right? A fall down below the 21 after these sequential failures to hold is a sign that there's more bearish price action to come. So for this, when I see this price action, and that's why studying price action is more important than just following some signals, right? Studying the price action. After seeing this, then to me, this would be a sell signal that I would get into as soon as possible. And if I wasn't along here, I would have had a sell order here to close a massive chunk of the position. And it probably would have been, it would just to reduce the losses. You know, it's harm minimization, it's risk management, all these sorts of things. So let's have a look at this short. Now, remember, if you don't have any moving averages, often where you're taking profit is 3-line strikes. Not immediately like this one here, but obviously you wouldn't have taken this one if you were waiting for this. A little move up would have been a good sign to get in around here, anywhere around here. And your first profit point on this move, if you were able to catch it, and if not, then so be it, was 4.34%. And the next one here, next 3-line strike was 9.35%. And then the next time to take profit would be places like, you know, your retests of 21s, anything where it recaptures levels. So we're recapturing the 21 here, kind of fell below it. Just look at the price action here. We've got higher highs and higher lows, very small here, but this is probably where you'd want to be looking at scaling out some more. But anyway, even if you took like half the position off here and here, there's still a nice amount of profit. Even if you took from signal to signal, that's still 8.9, that's like 9%. Obviously a lot more if you're taking some profit off the table, but yes. Next position would have been here, buy signal, we retested here. So being that close to the 21, I probably would have just taken this, because as I said, I like to front run about 0.5% anyway. So I would have taken that. My first profit point would have been here at 2.12. Then we came back down and could have been a re-entry, but you know, especially on this trend line, very strong trend line, these linking these two here. And now look what happened. Holy moly. Okay. This was back on the 24th of October. Let's have a look at the absolute max to min to max. 20% move on Solana, right? Anyway, let's just run through. You would have taken most likely profits on this. We beat all the moving averages here. So you would have had like only a quarter of the trade left. Maybe you re-enter on the 21. Again, those are up to you. But there was no other profit point until here. So, but yeah, if you just went from signal to signal, which, you know, you might want to just consider doing it, not waiting for retest, but signal to signal, 14.27%. Signal to signal, 5.43. Signal to signal is a 3% loss. Signal to signal is a 4% loss. You know, that's why I like the retests, because it reduces the losses. So that's just why I play it like that. And then we had this short. How nice would this have been? So 8% short. So not only are you getting the price move up, but you're getting the price moves back down. So you're getting, like, if someone just buys here and holds, you're getting this, and you're getting this, and you're getting this. So there's another long signal here. I actually took this in a sub account. I decided to fund another sub account of mine and take this signal. And I put a buy out here on the 21. So I'm finally using this strategy again. On the 21, I front run it a little bit. So I got around 32. And yeah, that's up about 9.3% right now, which is really nice. So that's these charts. The next one I haven't covered yet, which is another swing trading strategy, is the Ethereum long. And I've covered that quite a few videos ago. And this is the daily candle, right? This is the daily chart for Ethereum. And this is another parabolic swing strategy. And I covered that in a video. So if you were following that, you'd be in this trade right now, because the way the strategy works is you get in at the closest moving average. So I was really hoping we'd come back down to the 21. So I only got in half my position here at the handle close because it was under the 50. So I decided to get in half my position, and then we went up. It took for my first profit point. So I've algorithmically set my trades with this strategy to take profit every 10%. So I'm aiming for 50% worth of price action for this strategy. So the first 10% was right here at 16.35. And when we came back down to the 50, I felt like we'd probably hold it rather than moving back down to the 21, because everything's looking quite bullish. So although you look at the stochastic, it's just been living at the top. I mean, it's done it before many times. But when I see this, I'm just like, when are we coming down? Are we? But yeah, I also got a re-entry signal, which that's not part of the strategy that I showed in the video, which is this one here. So it's the same strategy, just looks a little different. This is the daily, where we also had a TDSS 9. So for me, I felt like it was a good time to take profit when we had a 9 on the sequentials. The TDSS is the Tom DeMark sequentials indicator, and it just shows where potential exhaustion of trend is. So we had this one here. To me, this is where I took a great deal of profit for my short, and this is where my long was basically. And yeah, we're in that long now, and that was covered in this video here. So some extra information here is that when we get this little E on my indicator here, which again, you can't get this indicator anymore, but when you have a little E here, that's a re-entry signal. So I got a re-entry signal here, and I was pretty happy with that because I already nailed the 21 once again. So that's up at the moment too, quite nice. And to me, it's quite bullish that we're holding the 50. We might get a retrace in the next couple of days though. We might come back down to the 21. I'm not sure. I've got more buy orders down here. I just keep moving them up because I only entered 50% of my position here, and then I added a little more here, but I've got more orders that I keep tracking up, and it's getting to a point now where by the time it comes back down here, it'll probably be exactly where the entry was anyway. So that's the sort of thing that can happen. And lastly, in terms of swing trades, I'm looking at this as well. This was a trade that I took. This was a long. So the way this strategy works is, and I'm leaving this strategy now to the last. I covered it briefly in the last market analysis video, and I think I'll just cover it briefly again here. I use the market cipher, which is this thing, this crazy thing here. I actually like the EMAs. It uses a series of smooth moving averages, and you can tell they are because the 21 on the TMA overlay, which is all these smooth moving averages, and this line up perfectly. So that's why they're smooth moving averages. So it's a series of smooth moving averages all on various time frames. And when they twist and flip, that's usually when it's a good time to take a position on the opposite side. So for example, I took this long here, right? This is fun. So this was a short that I took. I took it from here all the way down. I definitely took this, took a lot of profit off the table. That was all good. We had a flip here and we failed to hold the 21 and we came back down. I just had my sell to flip the position here and it didn't hit it. So I just kept moving it down more and more and more and more. And then I just, as soon as we got down here, I just cut it and I was like, I'm just gonna hold and wait for the flip, which is not ideal, but you know, it is what it is. So I just waited. It's not really smart to do that because if the floor fell out, then that could have been really dangerous. I did have a stop loss in here, but I killed it briefly to wait to see if this trend line would hold. This is a very long-term trend line. This comes all the way back to the top, essentially. So to me, I was thinking this could be the breakout, the retest, and then we're off. And that's exactly what happened. So we came down, retested the trend line here, and then we were off to the races. So as soon as I saw this retest, I actually had a buy order in here in a different strategy. This is kind of a bit of a punt, if you will. I took a long here. I'm not in that long anymore, unfortunately. That would have been very nice if I just held that, because I mean that would be up 30% right now. But anyway, it was a short-term swing trade that I took from here to the 21. So a long, that was a little one, 8%. So then I was finally in profit after holding through this whole thing. And as soon as we saw this retest and this rejection, I put my stop loss there immediately. I was like, I don't like not having a stop loss. You always need a stop loss. I just wanted to wait for this. I just felt like it'd probably be a liquidity hunt to take out all this liquidity down here. And that's exactly what happened. And as soon as that hunt finished, that's where I put my stop loss in. So that was finally good. And that trade did very well. I was taking profit at moving averages. So as soon as I was in profit, I took one here. I took one at the 200, which is the red line here. And then I was just had a tiny little bit left. And then I went short at the 200 and the 21. Now this was the FOMC meeting. I never recommend anyone to trade during these times. That's so volatile and so crazy. But I took a short here. So my first entry to short, and so I flipped my position here, 21, which is the white line here. And the next one was at the 200. You can see that rejection was perfect. It felt very nerve-wracking doing that, but that went in. My average open was around here, 32, 34. So I put this white line so I could see where my position was. That was my average open, and took profit at the 100, then at the 50. So my break even ended up getting pushed up to, 33 or so. I think it was even higher, in fact. But nevertheless, it was a good thing that I did that, because then this happened, this massive run up. And so we had the EMAs flip blue once again. And then the retest of the first moving average was the 200. So right here, this 200. Normally I like to wait for a retest of the 21, but I got out of my position, small amount of profit. And now I'm long on this particular trade here. And that's already up 6.8%, which is pretty nice. I did kind of expect us to come back down to the 21, but we tested this candle here in itself, in this 4-hour candle, already tested the 21. So in this whole time here, this already tested it. So to me, I was like, well, this has already tested the 21, so I need to look at the next one, and that's the 200. So that already tested there. We're in this long now, using this strategy. I don't really use this as much anymore, this market cipher thing. It's okay. It's kind of nice because on the 4-hour anyway, you can see the dots. When you see this green dot, especially if you see divergences, I like these. So there's a divergence here. And in like many videos ago, I had a strategy where you look for divergences like this, where you got a big wick here before, and then a divergence here. That's a long signal. So if you did actually take that long signal, then, you would have got in here, which I didn't, but that's, 10%. So yeah, that's this strategy. And I like this for swings. I also like it on the 15 and the 5 minute. It's quite nice. 5 minute, it works like this. You wait for the bands to flip to blue, wait for the retest, and then you just hold until the flip. So that'd be up 6%. So again, bands go gray on the 5 minute. This gives a lot of false signals though. So sometimes it's better to smooth it with the 15. So then you're in for longer periods of time. But then sometimes you don't get those retests, but we got one here. So retest of the 21, and then we're 12% up. Here, retest the 21, then you're up 3% at one stage, taking profit along the way. But it's like, where do you take profit here? Maybe Fibonacci's, there's a Fibonacci here, and other key levels. But yeah, sometimes you just don't get that retest, which is one of the reasons why with this strategy, at one stage, I was actually just going long as soon as I got the signal and just aggressively taking profit along the way. So that was just a small win there, up to the 200, so on and so forth. But yeah, the market cipher, I've covered in previous videos, but at least if you want this on your chart to look at the EMA bands, which I quite like the EMA bands, and you just type in market cipher here, and or you just type in VMC cipher, I should say, and basically it's the Fu Manchu cipher A. And you can see that a lot of people have this on their chart. 8,000 people have added it to their favorites, which is this little star here. So if you find an indicator you like, good idea to add it to your favorites, so you can always pull it up anytime if you want to remove it from your chart. So that's this one, and then this is the B right here, the market cipher B. So I have a lot of charts, and the way I like to play this is if you have the first tier of premium trading view, you can have this split view, right? So if you have a strategy that you like and you want to have two slight variations of it, this is basically, you have this split view and it just duplicates it over here. So get the chart set up the way you like it as one. And then when you are happy and you want to do a different time frame and maybe add some different things to the other time frame, you click this and you press this one here. And this will put them side by side. And then if you hold Alt on your keyboard, whichever one you click on goes full screen. And then if you press Tab, you flip between them. Pretty cool, huh? So I don't know if you noticed that in all these previous charts. If I flip here, well, I got the 1 minute. I got the 1 minute chart on Solana using this this same parabolic PSAR strategy. However, with this one, there's a little trend bar down the bottom. So often when I want to do some scalping, what I will do with this, and this is kind of pointless to show because can't get this indicator anymore, but I don't take every one of these signals. What I do is I wait for this bar to turn blue, and then I go long on the first moving average retest. So this was the first one here, went long here, and then I put my profit points algorithmically set at 1% intervals. So 1%, 2%, 3%, 4%, 5%, because I've got it broken up into 5. And so yeah, that scalp finished up right here, basically at the top of this move here. Just kept going though. I did take the short, but then I flipped it. It's kind of crap, but it's kind of what happens. Though this is with the unemployment figures right here. So I'd actually know this was coming out. That's why you got to check the calendar, the Forex calendar. I didn't know this was happening. So I went short here and then took one of my profit points and then came back up and then flipped. And then I just went long immediately. Didn't wait for a retest, although I did retest eventually, but I didn't wait for a retest because it was like crazy. It's like, whoa, what's going on? And then took this short, again, scaling out pretty fast. It hit one of my profit points. Where is it? There was the flip. There was the retest. It did hit one of my profit points. I think maybe I moved it into profit and just snagged it because I wasn't sure how far this would go down. And then I missed this long because I was asleep. But anyway, if I took this long, this would have been pretty nice. 5% move. But there's no point in showing this. I just want to show you this tab thing, right? Because it's pretty cool. Right here, I've got this flipping between the Solana 2-hour BP buy and sell with the parabolic swing on the 2-day for Bitcoin or the ETH. So that's pretty cool. Switch between those. I don't have any second chart on this one. This is a solo chart. But yeah, it's kind of cool. Cool little feature. So yeah, you can do the same thing with this EMAs as well. Quite like this. This is really quite nice. Often you just get left in the dust if you're waiting for the retest though on this. And especially if you're going down to the 5 minute, then it just often, you just don't get that signal. And 5 minute gives a lot of false signals. So if you got in here, that's a 1.5% loss. It's not ideal, right? So I like the 15 minute. So this is how I'll have my chart set up. I'll have one half of the screen on the 15 minute, just as confluence to see, what the trend is. And then the other half of my screen, I'll have the 1 minute side by side. Next up, we're over the Hyblock chart. I will quickly cover this one because this video has gone on for long enough. First off, I'm looking at the top traders' average leverage used. So top traders are starting to really open up longs. And this to me was a very bullish signal. As soon as I saw this flip above, this was back here, to me, I saw that as a pretty bullish signal, although, we did break out of this range here. So we're at the top of the range here, a break out of the top of this range. Top traders on this candle started going long. So that to me was quite a bullish signal. They've been kind of flip-flopping back and forth though. They were kind of equal here. But the top traders are relatively long right now. But as soon as I start to see this coming down again, like the average leverage used come down in general, and something like this happen, like last time, I'm going to be very bearish and I'm going to try and release a video as soon as that happens, because to me that's going to be a reversal sign where we might come down and retest some of the lows. But yeah, we're getting the whale versus retail slowly creeping back up, and fear and greed is looking at 38. So last time we were at 38 was August. It's been a while, hasn't it? We haven't had this kind of, even here we didn't really have that much greed. It was 34 only during this little pump here. I think people weren't really that sold on this pump, but the fear and greed tells me that more people are a lot more sold on this pump, because I guess there's a lot more sentiment, bullish sentiment around to indicate that, you know, Christmas rally's in, relief rally's in, we're going up, but we haven't even taken out this high yet. So just be careful and be a little bit more reserved with being overly bullish like I was during this chart. Just be a little bit more reserved because we still haven't taken out this high here. So something that could happen is we watch out. If we see the fear and greed turn yellow, which is 47 here, and then I would be very apprehensive and very cautious, I should say. Very cautious, be very cautious. There's a lot of passive liquidity to the upside. Have a look here. This big red candle here tells me there's a big sell wall above, bid-ask ratio. Often what happens is when there's this big sell wall above, this much of a sell wall causes price to go down, but smaller sell walls can act as just passive liquidity. But yeah, you give this big sell wall right here. Look how big this was, right? We were just going up and there was just a huge amount of sells just sitting above price constantly. And it got too much and then basically just fell through. So this is something to consider. Whenever you see these big sell walls, it suppresses price. Because when you look at an order book, then, and this is aggregated as well, okay? So when you look at an order book, if you see a big, like several $1 million position above you, are you really gonna buy into that? You know, you'll just take that order and it'll probably just smash down. So that's what order flow is all about. It's about studying the way the order book works. So if you see these big sell walls or even buy walls, I mean, look at this big bid wall. This would be a bid wall here. This kind of just acted as passive liquidity though, but it wasn't that big. This one was quite big, so this pushed price up. This was quite a large sell wall, which was on this candle here. It didn't really do that much because I guess it was pulled. You can see it was pulled completely there. But yeah, so I'm looking at for these big sell walls on the daily. If I see something like this and also see the fear and greed start to get up here, then I'm going to be very cautious. Especially if we see the move back up to the 0 line or above and all these things line up, then I'm going to be closing off a good portion of my long. But hey, I feel like we've still got some juice left in the tank, you know? We're not so greedy just yet. We're not really up to the 0 line just yet here. And the top traders are still relatively long, you know, in terms of the leverage used. It's sort of an indicator of how confident they are in the move. Because you don't use a lot of leverage if you're not that confident. So that's the Hyblock chart. So let's have a quick look at the open interest using the 15-minute chart. It's getting pretty high, which means we're getting more liquidity in the market. So a lot of it was cleared during this move here, this move to the downside happened in the last few days. But if you have a look here, we've got a massive spike in liquidity. It's $128 million aggregated in coin margin contracts. So that's perpetuals using stable coins instead of using assets as collateral. But we have all of this liquidity here, $145 million worth of probably longs. So to me, there is most likely a big potential move to the downside coming. And that might just be a correction, you know, maybe back down to the 200 period, retest that before continuing. Like, who knows what's going to happen. But this, to me, when this builds up, this open interest, which is how many positions are open, perpetuals positions are open, how much money's in there, that just means there's more fuel for a potential move down. So I'll be looking for potential divergences, say in the CVD, which is the cumulative volume delta. If I see that price is going up, the CVD is going down on spot, it means that spot is starting to sell off. They're taking profit aggressively. So if you start to see the CVD move down and the price moving up, that means that spot, which is generally takes a lot of spot to move the market. So these spot positions will be big players, really big players, and we'll be looking at distribution. So we've already got a divergence here. Have a look here, move down, whereas we've got the price going up. So to me, I look at spot is selling and taking profit, possibly distributing as price is going up, and we have all of this liquidity. So there's a good chance maybe we'll get a big sell wall in that'll be very hard to fill. And if it can't be filled, then price will move down. So that's something that could happen, but I still feel we've still got a bit more juice left in the tank, some more of a move to the upside. But next week, I think we should be very careful about where we're going to go. And for me, I'm basically looking at this 21 as the potential retest point. So maybe Bitcoin keeps pushing little by little, maybe hits 22,000 and then retests the 21 again, you know. But so we've still got a little bit of a move left potentially before that happens. But the more this open interest grows, the greater the move that follows and the more volatility that comes in. So that's it. Hopefully you got something helpful out of this video. If you did, please leave a like, subscribe to the channel, and you know, leave a comment down below and let me know what your thoughts are on the current market conditions. If you're bullish, let me know, or bearish, let me know. Maybe give you reasons why. Feel free to say anything down there. That's fine, and I will interact. I read all the comments. So yeah, the main thing to consider right now is that a lot of signs are pointing quite bullish. As you can see, my parabolic SAR is long, the BB buy sell on Solana is long, everything is long right now. So, but that could change. So you've got to be ready for the next move and act accordingly. But yeah, right now, things are looking quite bullish, in all honesty. But a potential move to the downside is on the horizon. So will it be that big move back down to sweep the lows of the range? I don't think just yet. I feel like we're probably going to keep this rally going to the end of the year, and maybe then we correct proper Q1 next year, I would say. And then we start that grinding process back up once again. So that's how I feel things are going to play out over the next few months. So yeah, keep safe out there. Peace out. All the best. It's Kryptolytix signing out. Peace out.